Hey guys, welcome back to another week of fundamental analysis from the 8th to the 14th of July. I am currently in a gold position right now, which we will walk through together. But yeah, let's have a look at the fundamentals first. COT this week, so quite a number of changes you can see a big volume change and bias change in the Aussie, the pound. We had a bit of decrease in the indices, but the pairs that we're looking at, oil and gold, we have an increase, 1% bias change in oil, and we have a 2% bias change in gold to the bear side. However, look at the volume change in gold. People are trading gold more. This is going to be talked about with my trade because I am in a gold trade right now, and we do have some good fundamental news regarding gold. So let's go to that. So fundamentally what's changed was CPI. I did get rid of unemployment claims. This comes in every week. There's not much change. I'll still track it on the next slide when we go through the Forex Factory data, but in terms of from my numbers, because it does skew the numbers quite a bit, I just took it out. This week we had the big change was CPI and PPI. CPI was both lower than expected for year to year and month to month. PPI was actually higher than expected. But we're going to delve a little bit deeper into these numbers next. So, last week's data. We had Powell speak on Wednesday and Thursday. Basically, on Wednesday, he delivered a neutral statement. He did acknowledge inflationary pressure was easing, but also mentioned that he didn't really want to give a timeline for the rate cuts. So no, not really much we can use from Powell on those days. GDP for the pound was actually very, very positive, higher than expected. Upon reading GDP, it is estimated to have grown 0.9% in the last 3 months, which is the strongest 3-month growth figure since January 2022. So we're looking very bullish for the pound. We don't trade the pound, but it's just good to know, what the other economies are doing essentially. CPI, which was the biggest news this week, was, you can see all reds for CPI. So this is the second straight month of cooler readings, and Fed Goolsbee did state that June CPI is actually excellent for the dollar. This is what the path to 2% inflation looks like. So not good for the dollar per se, but good for the US economy in the sense that inflation's coming down. However, when we do go to the University of Michigan consumer sentiments, the sentiment figure is lower, right? Which is kind of, if we were expecting inflation to come down, this sentiment theoretically should be up, in the sense that things are getting cheaper. But the Joanne Hu, which is the director of the survey, states that despite expecting inflation to ease, consumers remain frustrated at the persistence of higher prices. Having a read of that statement itself, that concept of stagflation, where things are still inflated, the prices are still inflated, but the actual employment economic side of the dollar isn't going too well. So we've got that stagflation concept, we've got unease in the market, really supporting long bias for gold. Now PPI, going back to PPI, which was on Friday, PPI was actually higher than expected, and it was revised higher to 0.0 from, I think it was negative 0.2, sorry. So PPI is conflicting with CPI. However, upon reading, it did say that economist caution that monthly data can be erratic, and therefore unexpected jump in PPI is less likely a worrying sign for future inflation pressures. PPI being month to month as well, not we don't have a year to year PPI number. So look, it's if we just had this flat reading, it could be a bullish sign, but all encompassing, especially when we combine it with CPI month to month and year to year being lower than expected, I'm going to take that any day of the week compared to PPI. So inflation numbers being cooler, um, couple that with the University of Michigan consumer sentiment being cooler as well, we do have a very good market for gold. Now, in terms of oil, there was the Hurricane Beryl, which I just read about, in Texas, which WTI is the Texas in oil sort of index and whatnot. So, hurricane in Texas, which appears that the worst has passed, and markets await assessment of the damage. Early indications suggest that most energy infrastructure has come through unscathed. So we'll see the WTI chart. After this, we can see it did have a drop off, and then now it's headed back to its sort of bullish run. So we'll have a look at that as well. Next week's data, we have Powell speak, we have core retail sales, we have CPI for pound, which is very interesting. We have cash rates for euro, we have retail sales for pound, we have employment for Aussie. So look, quite a nice bundle of news for the other currencies, which we can use to see just where the dollar is at compared to the other currencies. So very interesting week, nothing crazy for the dollar. Now take home, although CPI and PPI are conflicting, CPI easing for two months straight, supports inflation coming down towards its target 2%, and then also increases the likelihood of rate cuts for September, which is bullish for gold. Strength of the dollar would decrease. Now, a decrease in inflation would stereotypically be bearish for oil, because oil, if prices are inflated, oil prices go up. But considering prices are still high for consumers, I'm sticking to the overall bullish sentiment for oil. Now, in terms of a COT report, even though gold did decrease 1% from the long bias, I'd still consider that increase in volume by 10%, get traders coming in and out, liquidity being generated, and with gold being overall bullish, I'm still very happy to trade gold alongside. And then oil did increase 1% bullish sentiment. So happy to trade gold and oil. Now let's have a look at that oil chart, Hurricane Beryl. Let's just have a quick look at Hurricane Beryl to see when it actually hit and whatnot. When did Hurricane Beryl hit Texas? Okay, July the 8th. So let's have a look at oil, July the 8th. So it would have been here. So you can see July the 8th, was that even? Yes, it was on the Monday. So Monday, July the 8th, you can see oil go down for the past 3 days, and then it did say it was easing. Now, I was actually, funny how it just comes to this support zone here. So I was actually eyeing this one out. Definitely, this was a good trade opportunity that I could have considered, right? And then now I would have stops to break even essentially. Did travel to 2%, 2.3 but that's about it. So look, this is actually a nice, right? A nice region of resistance turn support that I could, when the market's open, I could actually get in through here, pop a stop here, right? But we'll see, we will see, because we are in a gold trade already. So we'll leave oil for now. Let's have a look at gold. So gold, I'll walk you guys through what I saw in gold. Basically, I had this level here marked out. I had had this level marked out. I saw it did break that level, retest this supportish area here, and I just sort of popped my stop under these wicks here. Thank God I didn't get wicked out. And you can see it rise a little, still didn't pass that, so we kept the stop still there, we didn't move it. Then it pushed up, we have this new level of resistance turn support. I popped my stop loss there. I will be putting my stop loss there when the market reopens, which gives it a lot of room, especially for that wick. What I'm hoping for is obviously this wick to stay, maybe bounce a bit and go back up. So, and then I'll move my stop loss a bit higher here. So right now we're trailing 1.86 R, which is great. Cost-free trade right now. So yeah, let's just see how gold goes. Very, very good from a fundamentals point of view. Now let's just have a look at the dollar index. You can see dollar index did test this area here. Let's get rid of all the ones that aren't in use. Dollar index on support right now. So dollar could come back up, could just ride down from a fundamentals point of view. Looks like dollar will just head down, but we will see how it goes. So I'll catch you guys next week. Yeah, have a great trading week.